Well, hello, this is Paul Martin with Investor Connect. I'm here today with Tony Rimas of the Fraser McCombs Fund. Tony, thank you for joining us. Can you tell us a little bit more about yourself and the fund?
Yeah, thanks, Paul. Yeah, Fraser McCombs Capital was founded by my boss, Red McCombs, and Chase Fraser in early 2012. We had a Fund 1 that it was born in 2012, around $40 million fund focused on seed and Series A investments. We then have moved into a second fund as of 2016 with nearly just about $100 million under management in that fund, with a bunch of strategic anchors, which include about 20 LPs, all of them being automotive strategics.
Well, great. It sounds like you made good progress there with the funds and moving up the chain. And you invest primarily in automotive. What are the things you look for in the deals you look for your fund? What kind of deals you think are going to fit your criteria?
Yeah, so we're primarily a auto technology venture firm. So we will get into sectors like the connected vehicle. We'll also get into on-demand services that may touch our lives in transportation. Also, along with that, fleet management. We think that eventually, car ownership could change quite a bit, and it seems to be changing daily today, moving from a full finance contract to leases now to usage-based solutions. We also are very interested in autonomous features that may move into, a fully autonomous, level 4 vehicle here in the near future. So that involves things like even hardware like LiDAR, but we're more interested in really the software side of it, like AI. And then, of course, last but not least is our roots. The majority of us spent time in one of the tiers of automotive, whether it was manufacturing, the supplier, or the retail side. And we're also making some heavy investments, mostly late stage, in the retail sector changes.
And what changes are those in the retail sector? Is that related to the automotive retail?
Correct. So trends like Vroom, which actually acquired Texas Direct Auto in Houston. Also, we've obviously are very close with the folks at Carvana and Shift and others. And, we think that more and more consumers are going to do more of their retail transaction online. And a lot of times I think they're going to depend on the bricks and mortar locations for delivery points and service of their vehicle during ownership.
What about the ride-sharing companies? It seems like that's one of the first major disruptions that have come along, and after a lot of the legislative battles in Texas, they're now back, the Uber and the Lyft in general, but there's many others out there. What's your take on ride-sharing as an investment opportunity?
Yeah, so we're actually an investor in a ride-sharing company ourselves called Via that's based in New York and Chicago today. And it is a pooling technology software platform that also has a managed service on top of it. Via, you'll obviously hear about a big financing round that should be coming out now that's led by a strategic that we'll be converting into. And in our opinion, their live site to profitability is much faster than the Ubers and Lyfts that are trying to solve global transportation challenges. So we're very bullish on the space. We're a little skeptical of the valuations. If Via didn't have the dispatching technology and triaging technology for their platform, which they're actually licensing to TNCs. So like the New York cab system actually licenses their technology to better manage getting cabs to people during up and down times. So we're still very bullish on the space. We don't think it's going anywhere but up.
Well, it seems like then the next stage is the autonomous vehicle, but it seems like there needs to be several steps to get out to truly autonomous vehicles. Where do you see the opportunities in that sector?
I mean, for us, we think there's a lot of opportunity in the infrastructure. So everything from startups that are tracking, things like, light changes, also, traffic patterns, even weather patterns. We think there's a lot of the surrounding environment that if you're an autonomous vehicle that is not on the loop, or surroundings, your environment changes daily. There could be, someone running out in the street on accident, one day. There could be a hailstorm the next day. So we think there's a lot of opportunity in infrastructure and in driving some of that technology as it gets out of a closed loop system. And we think, autonomous vehicles are a trend that's coming. I think we could definitely see mass adoption in things like HOV lanes in the very near future, maybe even 5 years from now.
It's coming up very, very quickly. And then there's a lot of ancillary tools around the automobile like insurance. And it seems like there's a lot of disruption going on in the insurance industry that might impact the automotive industry. Anything over there that catches your interest?
Yeah, I mean, we've seen some startups. I'll name one that we did not invest in, but we stay very close to. Is a company out of Chicago called ClearCover. That company is trying to be a malleable carrier for a person who lives their life with the intent of buying insurance only when they need it. So they want an insurance policy when they rent a 15-passenger van with their friends to go to a concert, but then they also take Uber and Lyft 50% of their life, and then also share a car with a fellow neighbor on Turo or on one of these platforms that allow you to jointly purchase a car. Well, that insurance has to be very malleable to fit that person's lifestyle. And we think that there's going to be more and more of that. I think the usage-based insurance stuff like, Progressive Snapshot, I think that's just the beginning. I think a lot of people, even though Snapshot did get some take rate, I think a lot of people don't want to be tracked. I think they just want to have insurance, truly in case something happens. So you're starting to see more of that. I think the insurance carriers today are also under a lot of pressure because cars are being made differently with different technology. So everything from, a new aluminum F-150 that may get hit by a hailstorm, that could be a tremendous loss factor to an insurance company, to some kind of a, autonomous component that's added to your vehicle, and it's very expensive to replace after an accident. So I think the insurance companies have some challenges ahead versus just creating consumer products for their existing members.
What about the electric car? It seems like that's coming up faster and faster. Do you see any opportunities on alternative energy cars coming up?
I do. I mean, I think you'd have to be, I guess you just say, kind of asleep at the wheel if you thought the electric vehicle wasn't going to take on more market share. I think a couple of changes need to happen. Whether it is the battery anxiety or your travel time anxiety. I think infrastructure needs to change in order for that adoption to speed up. And I think it was Norway I was reading about where they had 3% electric vehicles, and then all of a sudden they started putting charging stations every kilometer on a major highway in Norway, which I don't know the name of the highway, but and supposedly the adoption now has gone up like tenfold for electric vehicles because people are seeing the infrastructure there to support their mode of transportation, their vehicle. I think that is I think that's important. I think the other piece of it is the charging time. I think us as Americans, we even hate the time it takes for you to fill up your gas tank. So I think, the speed to charge, if I'm going to and from Houston, I don't want to go sit in a Starbucks parking lot for 30 minutes and add that on to my trip.
Right. Yeah, that's too long for sure. But the other disruption that comes up that you mentioned earlier is the blockchain. And it seems like there's a lot of opportunity for the blockchain in some of these automotive applications. Where do you see it might coming up sooner rather than later?
Yeah, I think there's a huge opportunity. I'm so glad you brought this up. I think there's a really big opportunity in the Ethereum side of blockchain, mainly around title tracking and the associated paperwork that goes on with a vehicle transaction. It is very cumbersome in the retail space. Insurance companies go through this, all of us go through this, where, the banks, we can't get the title transferred fast enough to where, there's a frozen capital component. So I'll give you an example. Paul, if you purchase a car from one of our dealerships today, and you purchased it, you were financing in a bank in Oklahoma. Therefore, we pay off that bank in Oklahoma. We have to wait for that bank to give us the title. Therefore, we get paid off on our vehicle. Therefore, I can put that vehicle, because I have title in hand, for sale onto a retail lot. There's all this frozen capital that's tied up in that process, and the consumer has such a bad experience, especially if they've had a life event, like a death in the family, a divorce. A lot of times you have to, get people to, show a wet signature on that title in order to get that vehicle transacted properly, whether it's a trade-in or a new purchase. So it's a very cumbersome process that I think the blockchain could solve, and that involves no money, right? I mean, all it is really title tracking.
There's so much financial processing and paper processing in the system today. It seems like there's tremendous efficiencies that come in from a blockchain type solution that comes out. If you were to implement one today, I guess you'd go after car title insurance, or maybe some sector of it would be the first place to go. And you mentioned Ethereum. Why would you choose the Ethereum network? I know it is up and running, but it's a general purpose network. And why would you choose that versus more of a custom specific network that might be specific to the automotive or insurance industry?
To be honest, the Ethereum one is the one we best understand right now.
Okay.
And seems to actually have a couple automotive applications on it. You'll see that I believe it was Mercedes-Benz just did a securitization for $100 million on an Ethereum-based platform. So I think it's more of following what people are doing versus checking out what else is out there, or what could actually fit the automotive industry properly.
Well, not to get too far off topic, but would you see any initial coin offerings coming out that you guys would be of interest in doing in order to help spur some of these technologies forward?
Yeah, I mean, we're trying to get as smart as we can on these, and trying to understand what is, what's a true opportunity for us and what isn't. I mean, this is a very new way to, raise capital and grow a business. So we're still fast followers, if anything.
Yeah, it's changing very rapidly, but in some way it looks like 1994. Here comes the internet all over again. A lot of speculation, a lot of risk, but a lot of really game-changing technology coming up, all in the same package. So, interesting times to figure that out.
I agree.
Cool. So if somebody wants to raise funding from you, what's your minimum criteria for coming in with an automotive technology or solution that you think, that's going to fit our radar versus what's not? You probably don't take, true seed, you guys as an idea, but at what point in that startup do you think that's relevant to you guys?
Yeah, what we like to see is some revenue generation. We're probably more of a Series A plus investor, because we have a discretionary, nearly $100 million under management in our second fund for $3 to $8 million type of financing events. Alongside others that is. So we will do later stage rounds that must be maybe much larger. We also have side letters with our existing 20 LPs. A lot of them we can, garner more money in a growth stage scenario. But to answer your question, we look at absolutely everything, even seed stage. There may be someone that has a seed stage product that we immediately have, a revenue channel for them in the auto industry. So we pretty much, we absolutely look at everything, Hall. I mean, I think you've seen us in the past. We'll look at things that, like your offering you just put out on your platform today, Your Six. I was in touch with that company nearly 8 months ago, trying to help them get into, places like USAA and other places, because I think there's a huge human capital need in the auto industry.
Absolutely. Well, that makes sense. There's a lot going on in this space, and it seems like there's quite a few new technologies coming up to provide disruption both on the automotive side as well as the insurance side and many other places as well, the use case as well. Is there anything else you'd like to share about your fund and what you guys do?
No, I just think we would love to invest, in all honesty, in more Texas-based operations. We seem to, because the auto industry is truly global, we don't invest just in Silicon Valley or in directly in Austin. We would like to see more Texas-based innovation, to tell you the truth. And it's not about my travel time. It's more about backing a really incredible state, and we just like to see more of that. So if you're a Texas entrepreneur, we'd love to meet you.
Well, we'll try to get more of those guys going your direction. Thank you so much for taking time to talk today. If somebody wanted to get in touch with you, what's the best way for them to do that?
Best way to get in touch with me is my cell phone, 210-386-6947, or it's Tony, Tony, at fmcap.com. That's fmcap.com.
Great. We'll put those in the show notes as well so people can find you and get back in touch with you as well. Thank you so much for taking time to talk today.
Yeah, thank you, Hall. Take care.